pace of global economic growth accelerated to a 5-month high in February, according to Markets PMI survey data. This is our headline index charted here right back to 2000. We can see that the rate of growth has accelerated, but it remains weaker than certainly before the financial crisis. Now, the PMI acts as a great indicator of GDP. Here in the chart, we overlay the bars of global GDP growth. As you can see, we're running at a level consistent with GDP rising at 2.5% annually. That's no great shakes. We can drill down further. The PMI lets us look at developed and emerging markets. The first line we overlay here, this is the developed world. Due to its sheer size, it really does correlate very closely with the overall PMI. But here, let's look at emerging markets. These are much weaker. They have been for the last couple of years, a key source of global economic weakness since the financial crisis. We can look at the emerging markets more on our commentary pages, but here let's focus on the developed world. Our next chart here, we've got the 4 largest developed economies about to appear. First of all, we're going to draw the US and UK. The lines as they appear here, we can see that there was very strong growth last year, which has moderated in recent months, but we've seen an uptick in February. Now, importantly, both of these are signalling GDP growth of around 0.6 or nearly 2.5% annualized in the first quarter. That's decent growth. But look, now we're going to draw Japan and the Eurozone. These lines here are coming in much weaker, key sources of weakness. The Eurozone PMI, yes, it was at a 7-month high, but it's only signalling GDP growth of around 0.3%. Japan, the PMI there hit 50, no change, stagnation. So what does all this mean? It means that with every month of stronger growth, the US and UK, they're looking to tighten policy at central banks. The reverse, of course, happening in the Eurozone and Japan. ECB pumping more money in as we speak. That should stimulate the Eurozone economy. Japan, looks like the authorities there are going to have to do more to boost growth. What does it mean for investors? We're seeing huge flows in our exchange traded fund data from the US into the Eurozone and Japan as investors front run that stimulus. There's lots more on market.com and on our commentary pages, which are updated on a daily basis.